Hi everyone, my name is Mary Redmond and I'm talking right now about the pound-dollar pair. So I talked a couple of weeks ago about this when it was in a strong breakout trend, and it looks like we may have formed an intermediate delta top up here at 67.45, and we could be going down. And there are a number of reasons for this, why there could be a potential trend change in the pound. If you look at it on a weekly chart, it is still in an upward trend. So we actually haven't seen a clear break of this yet. And if that does break, and that line looks like it's just about tandem with the 50-day moving average of the pound. If that does break and hold, then we could be going in for a more sustained downward trend. And I think probably the reason for this is that the Bank of England, Mr. King, came out and said last week that the additional interest rate hikes essentially would be very unlikely. But he's more concerned at this point about the UK economy slipping back into another contraction. And the high debt levels pose massive economic challenges that would be exacerbated by high interest rates, he said. In addition to that, he said it would take a long time to repair the damage across Europe caused by the financial crisis. And these sovereign debt issues in the EU actually affect the UK simply because they're next door neighbors. And the EU is probably the UK's biggest trading partner for a lot of exports, tourism, and that type of situation. So there's also a psychological impact. I mean, with the S&P downgrading Greece's debt ratings this morning, and there's continuing problems with Spain and some of these other countries having higher interest rates. That's going to have some spillover effect on the UK, even though they're not part of the euro. So the market was pricing in a number of interest rate hikes from the Bank of England this year, and now it looks like that's not going to happen. There were a number of economic indicators that came in weaker than expected. You had the housing prices decline for the first 3 months of the year by 3.7%. You also had a weaker than expected purchasing managers report a couple of weeks ago. And all in all, it looks like they're going to hold off on the interest rate hikes, at least for the next couple of meetings. So we also had a breakout to the upside of the US dollar index last week out of its downward trending channel. So this was a very big move for 1 week, and it looks like it's probably going to consolidate maybe for a day or two, remain range bound, and the next level of resistance looks like it's around 75. So it might take a couple of days before it were to break out above that, which could correlate with another break downward in the pound. So we did have a cross here on the twin RSIs, which I like, and we did have a cross here on this indicator. And if you look at it from a delta perspective, if the intermediate term delta 12 is in, we may be moving downward for 1, which is actually going to correspond to the May 17th date. But you don't know how these things are going to play out until afterwards, and of course, hindsight is better than foresight. So, and it's never good to chase a move down. I already have a small short position in the pound, but what I'm looking for, if we do have a move up this week to the 64 or 65 level, I think that would probably be a good short. And in addition, if you look at this on a daily chart, what we did have here is another cross of the 5-day moving average below the 10-day moving average. So we want to keep an eye on this line here, of course, because that's the intermediate upward trending line, and a break below that could bring us all the way down to $1.60. So the other date to watch, of course, this week, in my opinion, it's going to be very important, is May 12th. And that's a date when you want to look at the Federal Reserve's website and see if they're going to extend the quantitative easing for another month. And if they decide to extend it for another month, then there's going to be extra liquidity coming into the market and supporting the stock markets and risky assets for another few weeks. Otherwise, if they decide to end it with this last round of purchases, which would equal $600 billion, then we could be going into a period in which we don't have that extra liquidity coming into the market. So we could have more of a stock market downturn in that case. So that's what I'm looking at for the pound, and right now I favor the downside.